Hi everyone, we are back. We are back. This is TBR Solutions. As you know, this is the financial slot. It is myself, the Saubrey Boyz Walefatshe. I'm together with our accountant, resident accountant, Mr. Negota. Mr. Negota is an accountant. He's not a fly-by-night accountant. Eh? You need to be very careful. This gentleman is highly qualified. He's got honors degree in accounting. He's got master's degree in leadership, and then he's currently doing PhD. He's one of the senior managers at Bitri, the funeral parlor. You all know Bitri. Not only that, he runs his own company, as you can see in the background, Gorosi. As he explained the last time, that Gorosi is about the seed, planting the seed, okay? And then not only that, he's a lecturer at Wits on leadership. Now, you may be a little bit confused. I'm talking about an accountant. I'm talking about leadership. All right. But in business, what you call the integrity of business or an asset, it has leadership as one of the integrities. And leadership is key because a leader has to synchronize all these other integrities. You talk about 8 integrities: mission, vision, leadership, communication, you name them, all right? So all those integrities, they have to be coordinated. And they can only be coordinated by a leader.
Yes.
Now, so you'll ask yourself, why is Mr. Chala talking about leadership? Everything needs leadership. The community needs leadership. Society, small community needs leadership. There is nothing that will succeed without leadership. So I want you to understand the background, why I say to you, he's highly qualified as far as leadership is concerned. It was not a fluke. It was by design. It was not by mistake. You know, some people go to school by mistake. It was by design. So those things, they do happen in life. So I just wanted to give you that bit of background. Mr. Negota, I welcomed you. Then I did that elaborative introduction because I want people to understand what kind of a person are we talking to. I don't know whether you want to add anything that I've left.
Yeah, not just maybe to add to what you were saying that, you know, the reason why you're talking about leadership. You know, there is a saying by John C. Maxwell. He says, everything rises and falls on leadership.
Exactly.
You know,
exactly.
And that's why leadership is very important.
Exactly.
It's a simple thing. People who follow soccer, they will note that where there is a good coach, the team actually succeeds.
Exactly.
You know,
exactly.
You can bring in a new coach with the same team, but you find that over time, then the results are not the same. But you bring in an experienced leader or a coach, then you find the results are totally different. So I agree with you that leadership, it is very crucial in every sphere of life. In fact, what he said is that by Miles Monroe, one of the greatest leadership gurus, you know, he says every single one of you, of us, is a leader. You know, if you are right now have not found that you have not found something that you are specialist in, you know, you will still be a follower, but you can be a leader because every single one of us, we have a gift that is unique to us. And therefore, you are a leader in that area.
You know what? The same with our families.
Yes.
We lead in our families. You know, you can differentiate, you know, it's leadership that is provided. If there is no leadership, you'll see. And like you said, I like the name of your company, Gorosi, the seed. It starts with that small little thing like that. And you know, I study leaders. You know, your Napoleon Bonaparte, your Shaga. They would say, "This is what I want." I'm not talking politics now. I hear Msholozi talking about discipline. I'm very impressed because we are in a country where discipline is broken.
Yes.
And if you look at, I'm not talking politics. Make no mistake. If you look at the way MK cadres behave, it's different. It's different.
Yeah.
Now it started with one person saying, "This is what I want to stress on." Napoleon Bonaparte won wars because of discipline. I listened to Chris Hani the other day. He said they were fighting the Boers, the first encounter with the Boers on the side of Harare. They were crossing Zambezi River. He said there were few in numbers, the ANC guerrillas. And he said it was our first encounter. And the Boers were having helicopters and everything. So due to discipline, they said we are going to keep mum. They said they kept mum. Then the Boers were confused. What is happening? What is happening? Where are they? They were shouting, "Can you see them? Can you see them?" And they just kept quiet. Then they said one general stood up, wanted to go and see. He said automatically his forces, without being told what to do, they just stood up simultaneous. They opened up fire. Now remember, when you kill the general, the whole army becomes disarray. Because the soldier don't fight without order. They always follow an order. Then this is very fascinating. Then he said they were running away. And as they were running away, they left all their luggages, everything. Then he said that was an undisciplined manner of running away. Then he said, guess what? We were hungry, we were not been eating for a long time. And that was a manna from heaven for us. He said, we chased them. He said, I attributed that to undisciplined coordination. So discipline is everything. So that's what I'm referring. So I wanted to link the understanding why I want to bring this element when I say you're doing leadership. Say, why is he doing leadership? We're talking about money. Even in even in money, you need leadership. Mr. Negota, like I said, we are still on our journey of explaining the two-pot system, the impact it will have in terms of people going out there to go borrow money. Remember, people, they want their money. It's their money in any way. But I like the way it has been phrased. They said, no. This is the money that you should collect if there is an emergency. Underline the emergency. Because it depends what an emergency is. It could be your car, it could be death, it could be anything. All right? But because people are triggered, they will always want to go and collect. And that's the catch is. All right? They will always justify the emergency, even if there is no emergency. So that is why we need to clarify to them. We are just giving them facts. They'll make their own decision. We are not decision
That's
makers.
it.
We are helping them to make a good decision.
Yes.
Yeah. Let's start where we left off.
Yeah.
Let
So
me allow you to share
okay.
so that we are able to share. Yeah. Now I think we can be able to share on your side.
Okay.
Yeah.
Let me go and let's share.
Mm-hmm.
Right. I just wanted to share. Let's share the screen too.
Yeah.
Yeah. Yeah. But before I get started,
Yeah.
I just wanted people to see this. This is from the Mail and Guardian. You can see from 14th of October,
Yeah.
which is today. This is the article for today. It says the retirement funds withdrawal from two-pot system total 21 billion.
By now.
Yes, this is on the 14th of October.
And this thing started
So,
on the 1st of September. Already
yeah,
21 billion is gone.
yeah,
Yeah, no.
you see.
Mm.
So that is already a problem because now with all this amount that SARS is making, people do not realize, and I'll go back to the calculation now, people do not realize that you are actually giving SARS an opportunity to collect money. And they will collect money now. Money that you are actually, in fact, on the money that you are supposed, you are not supposed to pay tax on. You are actually saying, SARS, tax me.
Yeah, yeah, yeah.
If you check here, for instance, you will see this is a retirement.
Just enlarge it.
Okay. This is a retirement.
Yeah, yeah.
So you would see on retirement, if you look at this, on retirement, the first 500,000, 550,000 rents, there is no tax there. You see, it's zero tax. At what point do you start getting taxed? You only get starting tax from one rent after the 550,000. In other words, any amount above that will then be taxed at 18%. In other words, if let's say you had, if you had 770,000, if we just take the last figure, if you had 770,000, you will only be taxed on the difference between 770 and 550. And which means the difference which would be, let's just show it in figures. So that minus that. That is the amount that you are going to pay tax on. And then you multiply that by 18%. Sorry, you multiply this by 18%. Now that gives you the amount of money, the tax that you are going to pay. Can you see that amount there? So what they are saying is that you are not going to pay tax on this. Now, suppose you have, even if you've got 400,000 in your retirement pot, that means the entire amount of money is going to be tax-free. You will not pay tax at all if you are to leave your money until retirement. And by the way, from a retirement fund perspective, you are allowed to take retirement from the age of 55. So you don't have to wait until 65. You can actually retire from the age of 55. So meaning that you can have an early access to your money and still do not pay the full amount of tax, the full amount. I mean, we do know that the situation in our country, that it's only a few people that actually earn above, that would probably have above 500,000 in their provident fund or
Yes.
retirement fund. And therefore, it means that, but these people there, they are the ones who have the most money because it is a lot of people. The people who have got 3 million, 1 million and above, in fact, when you start 1 million and above, the number starts to shrink, which then means that there are few people who would actually pay tax at retirement. And therefore, if we take our retirement money now, we are actually saying, SARS, tax us on this money that we are not supposed to pay tax on. Simple as that.
Let's go back to that calculation that you are doing of the 20,000, yes, 10,000, so that they can see it as you are doing it on the screen live.
Yes.
How much
so that I wanted to go back to, thank you for that. So I want to go back, and you can see between this one to say, when you are now before retirement, your tax, your 18% starts when you are at this amount here, 237,000. Whereas here, it only starts after 550,000. So that's the distinction between the two. Now let's go back and
so
say,
let's correct it. Before retirement, you are at 18%.
Yes.
Retirement, at retirement stage, you have the benefit of 550.
Which is zero.
Yeah. Which is the first 550, it's zero. So you have that benefit. But if you leave earlier than retirement time, remember retirement time with GPF is 60 years. With other funds, it's 55 and above. With GPF, it's early retirement, 55, which will subject you to penalties because it's early retirement.
Yes.
And then, but the taxation, because of the 550, I think you'll have a grace there.
Yes.
But when it comes to taxation, if you want to be financially savvy, you'll make sure that at 55, firstly, for instance, I deal with Alan Gray, and then if they transfer their pension from GPF, from Alan Gray, at 55, there is no penalties at all, not even a cent.
Exactly.
The money moves from GPF to Alan Gray, there's no penalty at all. And then over and above, in terms of the taxation, they are going to benefit because there's this 550 now, which they need to enjoy. Okay? Yeah. So I wanted to bring to their attention that, so that they can think, clearly before they go and ask for this one.
Yeah. So thank you. And then so now we are saying that if you decide that, remember the maximum is 30,000 rands.
Yes.
That is the maximum. So this amount is the maximum that you will ever get in the two-pot system is 30,000. So if you then decide that I'm going to take my 30,000 in full, what it means then is that SARS will say, let's take the 30,000 plus, so it's 30,000 plus 200 and let's just say 200 and, okay, so that's first. 230,000 is the amount that you were being taxed at 18%. Right? Now you then decide, I want 30,000. 30,000. Then they are going to add the two amounts and say 30 plus that, which then gives you a new tax bracket. At the maximum of that, you were being taxed at 18%. Now you bring in this money, it moves your bracket to that. Then it says the 30,000 now that you got, instead of it being taxed at 18%, it now gets taxed at 30%. So now I'm at 26%. So now you're going to have 26% there as the amount, as the percentage of tax you will pay. And then this one is taxed at 18% there. So what it means is that by just coming on to this, you then move, that's why we call it has changed your tax bracket. There's been a change in your
Let me get it clear.
Yes.
When I want 30,000.
Yes.
Then I made this tax bracket. Yes. Because I want 30,000, I've moved to the new bracket.
Yes.
267. Because I'm now moved to the new bracket, 267, that 30,000 is going to be taxed at 26%.
26%.
And then this one will continue to be taxed at 18%.
18%. Yes.
So in rents, it's 7,800 tax.
Yes. Yes.
And 42,000. All in all, would have been taxed close to 50,000.
Yeah.
Okay, so people need to understand. And 50,000, it's a huge money. Mr. Negota, you know, I normally tell people and say, when you talk about money, it's all about psychology. And then I ask people and say, how many of us, when we see 20 cent, 50 cent, 10 cent, do we pick up? We just pass it and say, you know, it will make me poor. Do you understand?
Yes.
Whereas there is this saying that says, take care of the cents, the rent will take care of themselves.
Exactly.
And I've seen this in action. You know, at some point, I taught myself how to do input vet and output vet.
Yeah.
And then I was looking at those 1 rand, 10 cent, 50 cent. Hey, you know what? I saved a lot. Saved a lot. Those 110 cent, 20 cent. And the majority of us, no. So now, you can imagine I'm talking about 1 rand, 10 cent, 50 cent. Now, if you lose 50,000, that's a huge money.
It's a lot.
That's a huge money. And on the other hand, you continue to say, I'm going to have money. So I just wanted to bring, you can continue. Yeah.
Yes.
Yeah.
No, you are very right. So look at this now. The picture says, yes, we will take a tax at 26%, which will be 7,000, right? And then after that, there's this admin fee. I just use the admin fee where they are processing your withdrawal, which then gets to 600. If you've got any outstanding taxes, or maybe you've had all outstanding returns not submitted and whatever, and you owe SARS, then this is how much it will be taken. Let's just suppose you've got 10,000 that you owe SARS that you had not paid. Then the total amount that is payable would be that much. By the way, SARS will not allow the fund to pay you your money before they get their money. So the retirement fund is supposed to pay SARS first, and therefore they are going to perform this calculation and then give you this amount. SARS will then say, pay Mr. Negota 11,600 out of the 30,000. Imagine how much you've lost, because that money you can never recover this money. It's gone. Out of the 30,000 that you thought you were going to get, now even your budget that you said, hey, I need 30,000. People must not budget on 30,000. Look at your situation, and if at all, if possible, we would say, looking at this, you can make a decision to say, do I proceed to pay 26% of the money or to pay zero. Because effectively, in this money, you could have paid 0% tax. If we go back to the 500,000, you would have paid zero tax. Now you're paying 26%.
I mean, so, 11,600 from 30,000. We are left with how much? 19,000. That's what you get. And you had budgeted for 30,000.
Yes. And you know, you are allowed to make an arrangement with SARS and say, on the outstanding amount, if you're not taking your, to say, SARS, can I pay you 500,000 here, whatever? You can make arrangement. Now there's no arrangement here. You've got the money. You can't even say to SARS, hey, I don't know. You've got the money.
You've got the money. There's no arrangement.
Yeah. So then you have to pay SARS. So this is the most painful part about this two-pot system. And that's why I'm sure you, and I know when I'm watching from your videos that you have, that unions, initially they were pro this, but then when they realized the impact is going to do this, they realize, oh, look, we are here for the working class. And therefore, let's limit this to this level, you know, and which then really helped, because you can imagine the catastrophe, and I want to use it was going to be catastrophic if people were allowed to take all their money now under the By the time people get to retirement, there will be no money.
There will be no money.
And exactly. So now these actually really served, but we're still cautioning people to say, as far as possible, if you can avoid it, try and avoid it. But look at the situation, because the situations are different. This 30,000 you're going to pay. So each time you take the money, it actually increases your tax brackets to the next tax bracket. And that's basically the point, to say, let us try and do the calculations like this, you know, get a professional advice to say, if I'm taking so much and my salary is so much, what will be the impact on my tax? You see, don't just take the money without asking for professional advice.
You know, when you talk about professional advice, I'll come back to that one. And remember, this still has a lot of impact, because this might be a pension from your employment.
Yes.
Let's say you also have a retirement annuity with another insurance, two or three of them. You are allowed to take 30,000, all of them. And because you are allowed, that increase the level of tax bracket. So people must understand that. It will go to that level. Yeah.
I just changed it now. Thank you for bringing that one, that Chabalan. Look at that. So you've taken from your three retirement funds. You got the retirement annuity with Allen Gray, one with Sanlam. We're just using examples here.
Yeah.
And then maybe one is your government employees pension fund. We're just using examples. Now, look at what happens now. You are going to pay now 23. Now, by the way, this now has to be 3 times, because it's for each fund there will be that. There will be the one 600 is per each fund. So now, can you see the impact just on what you just said? It then says from 90,000 you add it to that, it moves the person to this type of bracket. But let's just see the tax bracket. Okay, you are still
within
this one, where you are taxed at 26%. But the issue is that now you are being taxed at 23. The 23,000 is going to get to SARS at the end of the day. Now, all in all, 40,000, almost 40,000 is gone.
Because, I mean, out of, you are left with 40, because it's 54, 800. That goes to SARS. You are left with 44.
This is what you are left with. Yes, it's right.
Payable.
This is now payable to you.
Or to me, okay, okay.
Yeah,
So
let's
that's a
just say
huge
to
money.
me.
So more than 50,000, it's gone.
Yes,
You see.
that's it.
So yeah, that's that. Yeah, I think people need to think this thing very careful. They mustn't rush. They
No,
mustn't rush
yeah.
when they do this thing.
Mm.
You know, Mr. Negota, I normally say to people, as I always say, money is emotional.
Mm-hmm.
And, you know, there is a story that I like telling people. You know what I like about business people
Mm.
who runs their own business? When there is no money, they must
Yes.
create it. They must
Yeah.
create it from within there.
Mm-hmm.
And then when you're an employee, when there is no money, you go to the boss and saying, tell increment.
Yes.
All right. Now, here is the dilemma. As a company, we're making 10 Rand in
Yes.
2023. Come 2024, we are still making 10 Rand. And
Yes.
you want an increment. Where does it come from?
Yeah.
You see, that's the question that they don't ask. Where does it come from? But when you run business, when there's no money, you must be creative. You must sit
Yeah.
down and think, how can I ensure that I bring more money? So there's no easy way out. And that
No.
element helps you to be innovative. So
Mm-hmm.
there are times, I'm sure you have seen it yourself, there are times where we don't have money as business people. And if you
Yeah.
don't have
Look.
money, you develop what you call the thick skin and say, how do I deal with this situation? Do I
Mm.
cry or do I sleep
Mm.
and wait for the money or do I work more? It's a catch 22. So that's the
And
beauty about business.
and when you've got employees, you know,
Mm,
the thing about it is that uh, when it comes to the 24th, to the 25th of the month, you start stressing because payroll is coming, you know. That's why in payroll, we normally advise our clients to say, tell us by the 20th. We normally practice to say, in companies, the 20th must be the closing time for payroll.
mm,
But when it comes to that day, during that time, as a business owner, you start thinking, hey, I must have 300,000 to pay
mm,
salaries.
mm,
Where
mm,
is it coming? You must check.
mm,
Do I
mm,
have enough income? If you
mm.
don't have, during that time, so the first, from the 20th to the 10th of the month, those days are not good for, for small
Exactly.
businesses, you
Exactly.
know.
Exactly.
But
Even
I
even
also
big
wanted,
business, even big
yes,
business, they're all stresses.
yeah, I wanted to add to what you were saying to say, also, I mean, also when you do, when you're talking about getting salary increases, that salary increases, they've got an impact. I mean, I used to worry a lot to say, they give me an increase instead of getting more money, I actually got less.
Mm, mm,
Only to find out this, that's why understanding these tax brackets, it's very important
mm.
because now it then moved my tax brackets to completely to a different tax bracket, and now I'm being taxed at a higher. Now instead of me getting seeing the benefits of that increase, I don't see them.
Yeah,
You know.
yeah. You know what? In closing, because we'll still
Yeah.
continue this topic. People
Yeah.
don't understand that there are different types of expenses. Good
Yes.
expense and bad expense. You need to be
Yes.
able to understand what is good and what is bad expense. So people don't
Yes.
just go out there and get that money thinking that they are going to do for good expense. He just want to throw a party for a child, then he go to two-pot system and get the money. That's a bad expense. A good
Yes.
expense, when I pay an expert like Mr. Negota and say, here's your money for your
Mm.
service, he's going to advise me so that I don't do the wrong things. That's a good
Mm.
expense. So people don't understand that. That's what kills people. People don't understand the good and the bad expenses. Mr. Negora, it was nice. It's refreshing, but we'll continue and talk about these tax jargons and the integrities of the taxation
Yes.
to help people understand so that they can be able to navigate, because our aim is to educate. The more we educate, the better.
The better.
Yeah. But
thank
you so
very
much.
much for having me.
Yes, Mr. Negota, say it.
I say thank you very much until we meet again.
Yeah, just give them your number when they want to reach your office. They want your service.
Yeah, our number, let me just, it's 011 393 1468. That is our contact number.
Let's repeat it
And
again.
there's a WhatsApp on that number, 011 393 1468.
011
393
uh-huh.
1468.
1468.
You can drop us you can drop us a WhatsApp on that number, or you can just call.
You know, I prefer WhatsApp. I'll tell you why. WhatsApp, a call, sometimes I'm in a meeting, I miss it.
Yes.
WhatsApp, it will be there. Whether I come or what, I'll find it, then come back. I also tell them that, Mr. Negota, thank you so much. Tonight, I'll be on the City FM at 8:30. I'll also mention them to watch this video when we post it. I think we are going to post it probably on Wednesday, so they can watch and learn. Thank you so much.
Amen.
I appreciate it. Thank you.
Thank you. Okay,
bye. Let's see. Where is? I don't see my case. Okay, there you are.